Kia ora. Welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we leave with news we're now halfway through 2025, closer to the next summer holiday break than the last one. We may need it more this time because economic progress is hard to find. Looking ahead this week, the big end-of-the-month data dumps for May from the RBNZ will give us an updated look at mortgage and term deposit activity. The ANZ will also update their business sentiment survey for June. Then later in the week, the June updates from the real estate industry will be released here. In Australia, it will also be about retail and trade updates for May. The week ends with the US on another summer holiday break, this one for their Independence Day. Their June labour market report will come in a day earlier this week, and a low of 129,000 gain is expected, preceded by PMI updates from all over. Markets also expect the US to announce tariff actions after the so-called 90-day pause. But Trump's deadlines mean little in war and other diplomatic areas, so don't be surprised if they mean a little here too. He will go ahead if they don't hurt his own businesses, pull back if they do. Of more importance to us will be the results of both Chinese and Japanese data and surveys. In China, deflationary pressures not helped by the tariff war are keeping China's industrial profits in a low zone. They barely hit 600 billion yuan in May, and that was their lowest level for a May since 2019, and 9.1% lower than May 2024. For the 5 months, they were down 1.1%, so the pace of decline is unfortunately building there. Across the Pacific in the US, the squeeze on American household incomes shows up in the latest data for personal incomes and spending, this data for May. Incomes were only up 1.7% than a year ago. Decreases in income support for struggling householders showing up in this data. And after inflation, they'll be going backwards on the income front. On the consumption front, spending was up 2.2% from a year ago, also lower than the May's 2.4% CPI inflation. This is a sure sign of rising economic stress that is spreading. And the final reading of the University of Michigan survey of June consumer sentiment was out over the weekend, and it confirmed the spreading household stress. This survey has been stuck at one of its worst readings on record for 2 months after plunging 30% in the first 4 months of 2025. Over the 80 years of this survey, a drop this large, this fast, has always predicted a recession. Sentiment readings improved slightly at the start of June, but were still 18% lower than at the start of the year, to indicate Americans expect much higher prices and a much slower economy in the coming year. It should be no surprise that this is the outcome of the changed US public policy direction. But financial markets are ignoring this signal, willfully it seems. They also seem to be overlooking these same survey results that show sentiment has fallen fastest this year for the most well-off consumers, whose post-pandemic spending spree helped insulate the American economy from recession then. They aren't doing it now, according to this University of Michigan survey data. In Canada, they got weekend news that Trump is going to use tariffs to punish them for trying to tax US big tech companies via its digital services tax initiative. The US wants free access to Canada and tax-free. Earlier, the Canadians had confirmed the digital services tax, which has been passed by their parliament and will go into effect on June the 30th. Separately, Canada has ordered one of the world's largest video surveillance equipment manufacturers, state-owned Hikvision, to cease operations there on national security grounds. The order bars Hikvision from conducting business in Canada and prohibits government departments and agencies from purchasing its products. Existing installations of Hikvision equipment across government properties are now under review to ensure their eventual removal. Hikvision cameras and monitoring systems are widely available in Australia and New Zealand. Economic sabotage may be spreading, but so are climate risks. It is early in the Northern Hemisphere summer season still, but both the US and Europe are struggling with dangerous heat dome conditions. China is not immune. These are sure to have economic implications if they extend through to September as expected. The US Treasury 10-year yield is now at 4.27% and unchanged from Saturday. And the price of gold will start today at $3,273 an ounce, little change from Saturday. A week ago it was $3,365 an ounce, so a 2.8% fall from then. And American oil prices are 50 cents softer from Saturday at just on $65 a barrel, while the international Brent price is now just on $67.50 a barrel. And the Kiwi dollar is now just on 60.6 US cents, up 20 basis points from Saturday. A week ago it was 59.7 US cents, so a net 1.5% appreciation. Against the Aussie, we're 10 basis points softer at 92.7 Australian cents. Against the euro, we're unchanged at 51.7 euro cents. That all means our trade-weighted index starts today at 68.1 and 10 basis points firmer than Saturday. A week ago it was 67.7, so a 40 basis points gain since then. And the Bitcoin price starts today at $107,509 and up 0.6% from Saturday. Volatility over the past 24 hours has stayed low, just on plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.